Both the euro and the pound sterling gained value against the US dollar. Yesterday, the overall situation was quite usual. The Bank of England lowered the key interest rate. However, the BoE's support of the UK Chancellor was considered a sign of a further key rate cut, despite the fact that expenses may cause a surge in inflation. Notably, Andrew Bailey said that the situation was under control and the Bank of England would support the suffering country's economy. In other words, the regulator will hardly revise its approach and will continue lowering interest rates. In this law, the pound sterling managed to recoup a considerable part of its losses. On the chart, we see a surge in volatility during the Fed's meeting. However, this was expectable. The Federal Reserve also cut the benchmark rate to the range of 4.75%. During the press conference, Jerome Powell tried to avoid embarrassing questions. Nevertheless, he made it clear that the regulator had no intention to meet all the requirements of the new administration of the White House. It is fully independent from political decisions, and it takes decisions relying only on the economic situation. The main goal of the regulator is economy and not policy. Fed's chair also pinpointed that he was not planning to leave his post. Such comments were defined as a bullish sign for risky assets as well as for commodity and crypto markets. Meanwhile, the greenback failed to get the anticipated boost. Although the stance of the Federal Reserve remains the same, in December the Fed may take another decision concerning interest rates. A lot will depend on the macroeconomic data, especially on the labor market. This day is likely to be calm amid the absence of important macroeconomic reports. Thus, Italy is going to disclose its industrial production and retail sales figures. France will report on its trade balance. All these reports are of minor importance. The US will publish its consumer sentiment figures calculated by the University of Michigan. The indicator is likely to inch up. The US will also issue the inflation expectations data. However, it is not clear whether these reports are able to support the greenback. I suppose that the currency will continue hovering within the existing channel. Now, let's move on to technical analysis. As for the euro-dollar pair, it will be possible to go long from the level of 1.0754 amid a false breakout. The target is seen at 1.0792. If bulls manage to touch this level early today, a breakout with a reverse test may allow the pound to climb to 1.0822. The pair will hardly go higher. But if this happens, I will consider sell orders from 1.0855, expecting a correction of 25-30 pips. Short orders could also be initiated from 1.0792 after a false breakout and from 0.822. Notably, the bearish sentiment is still in force. A false breakout from these two areas could give sell entry points with targets at 1.0754 and 0.715. As for the British pound, it is trading near 1.2972. A false breakout of this level will give a sell entry point amid the absence of fundamental data. The correction could lead the pair to 1.2935. There, buyers are likely to become more active. If the price manages to climb by 10-15 pips from 1.2935 amid a false breakout and then returns to this level, it is better to avoid buy orders until the price touches 28.29, expecting a correction of 30-35 pips. Long orders could be considered from the level of 1.2935 if buyers climb to 1.2972 early today and consolidate above it. Pound sterling may rise higher to 1.3006 or even 3040, where it will be possible to go short. Sell orders could be initiated from 30.06 and 29.72, only in case of a false breakout. Best of luck.